Ed, first, just kind of more narrowly on the earnings, what do you think is most important for investors this afternoon?
So when it comes to Alphabet, we want to see how cloud is doing, right? It's been their big growth area. It's a newer area for one thing. Search advertising, that's their chess piece that they can hold on to. That's always going to be good. It's always going to be stable, nice and growing. And we'll take a closer look at things like cost per click. That's an important metric to look at. But the forward momentum has to be about cloud. And how are they taking share away from Microsoft? Are they taking share from Amazon? Is it just growing altogether? That's going to be the key part.
And they're starting to give more information about the other.
They are giving more information. That also YouTube, YouTube is always been sort of a question mark for me, just because they don't release a lot of data around it, and it's not always clear how their businesses, what the costs are for that kind of a business. If they gave us more information on that, that would be better. Yeah, exactly.
Aaron, what do you think? There's some investors out there who just kind of, look at this idea of breaking up Google, not because of antitrust concerns, but because they say, look, you could have Android as a standalone company trading at a great multiple. YouTube, maybe. Right. Waymo. I mean, look at what value people have assigned to Tesla or some of these, and Google itself. What about that?
Yeah, I think it's less about breaking it up versus more investors want more transparency. So to your point, we'd like to get more information on YouTube. Some people have been speculating maybe we'll get that on this call. I'm not sure why we haven't gotten that for several years now, but investors want more transparency onto YouTube performance, other businesses, whether it's Waymo, Cloud, which they've given from time to time some revenues with Cloud, as well as Google Drive or Google One. But yeah, investors want more transparency. We would like to do more of a sum of the parts analysis, and Google historically has not given that much data to be able to provide that to investors.
Aaron, I know the SEC has asked other companies in the past on business lines to say, we want you to, I think even maybe one of the auto companies, we want you to give more transparency. Ironically, Aaron, if Google does that, won't it feed into people being able to say, well, if you broke apart this piece and that, won't it actually cause people to do that more?
Yeah, I haven't heard as much investors say they need to separate the business. I mean, they're all, let's say YouTube and search are both advertising, obviously, but investors want to be able to see the growth rates for search versus YouTube. We think YouTube continues to grow at a kind of 25% plus growth rate, but Google doesn't obviously disclose that. So I think investors could value some of these assets higher if we actually had the information on revenues as well as operating margins for some of these segments.
True, and I see that you have a $1,300 price target. Is that still true? And overweight weighting? What are you going to be listening for this afternoon?
Yeah, so we always focus on the Google Sites growth. Obviously, it's still kind of 80% plus of the revenues, still the kind of where all the operating profits are for Google. And so we're looking for about 20% plus growth in Google Sites, which is both search and YouTube. But to your point as well, we're also looking for growth in some of the newer businesses. So Google Cloud, Google Hardware, updates on Waymo, which could be a nice long-term business as well. So we view those today as option values, but we're still focused mainly on the core Google search, Google, YouTube, as well as kind of traffic acquisition costs as well, and margin, which is always a big focus, operating expenses and margins as well for Google.
That's a laundry list. So Ed, finally, people have wanted and watched with great interest what happens with these other bets in the past, and then frankly they often underwhelm. Is that ever going to change with Google?
It's not, and I think that's actually smart on their part in terms, they're talking about breaking it up, and maybe some of the parts are worth differently. A big part of its operating ethos is we have this great technology. We sort of incubate ideas. If they go somewhere, great. If they don't worry about it. We'll move on to the next thing. And I think a lot of what underpins their growth has just been figuring out the tech better than anyone else. You want to kind of keep that. It's good to take these bets and see if whether they fare well or fare not, because you're never going to know where the next thing is going to come from. Yeah. And then lastly, on the whole sort of breaking up part, it's going to come down to how the U.S. government, if they start seeing antitrust in a different way, right? Like if there's a concern about Google getting too powerful, it's always about proactively. So more of an interventionist approach, the way that Europe does. Right now, the standard is it harming consumers? I mean, it's all free. Most of the products are free for users, so it's actually a nice benefit just from that really blunt assessment. At the same time, it gets more complicated when you look at the entire ecosystem.